Now let's start calculating the burn rate. There are two types of the burn rate. There is something called gross burn rate, and the other measure is called net burn rate. Gross burn rate means that you are looking on the operating expenses, the cash outflow, without consideration to any cash inflow or any revenue. So you are trying to measure your operating expenses that you are paying in cash, and this will be the gross burn rate per month. The net burn rate, the other measure, is calculated based on consideration of the cash outflow for the operating expenses and the cash inflow that you are collecting from your customers. So the net between both is the net burn rate. So for example, if you are spending $100,000 on operating expenses every month and you are collecting from your customers in the early start period for your business, $20,000 for example in the month. So the net burn rate is the difference between the $100,000 that you are paying as operating expenses and the $20,000 that you are collecting. The difference, which is $80,000, this is the net burn rate. Let's take example. Assume that your revenue is $2,500 and your operating expenses is $7,500. As you can see, the revenue, because you are collecting cash from your customers, so it is a positive. And for the operating expenses, because you are paying cash for different parties, for example, for the rent, for the salaries, for the insurance, for the utilities, for any type of operating expenses. So the total operating expenses, 7,500 as a negative because it is cash outflow. And the net between the revenue and the operating expenses is operating loss, which is $5,000, because your operating expense is 7,500 and you are collecting, or your revenue is 2,500. So the difference between them, or the net, is $5,000 as operating loss. And that's because your operating expenses is much higher than your revenue or your collections from the customers. Now let's calculate the gross burn rate and the net burn rate on this example. The gross burn rate in this case is your operating expenses that you have, which is 7,500. So you are looking here on the cash outflow without any consideration of inflow that coming from the sales or revenue. And regarding the net burn rate, this is the difference between your operating expenses and your cash that you are collecting from the customers, which is $5,000. This is the net burn rate. Now, if you would like to go one step ahead in this example, and if you know that the cash balance in the company is $75,000, can we calculate the time left for this business before it run out of cash? Let's calculate it. If you know that the cash balance is $75,000 and the gross burn rate is $7,500, so simply you have 10 months in order to run out of cash in this company and get out of the business. So now you have 10 months. During this 10 months, you have to do some actions. One of the actions is to control your operating expenses, to reduce the operating expenses. One of the actions is to increase and push on your sales and the collections from the customers. One of the actions that you can think to get additional funding from maybe investors or from a bank in terms of a loan in order to secure your operations and your business. But you have to go in this order. Control your operating expenses, push on more sales, and start thinking on strategic initiatives that you can do and get additional fund from the investors in order to expand and grow your business. Some other people are calculating the net burn rate as the difference between the cash balance in the last month or the previous month and the cash balance of the current month. So if you know that in the previous month you have cash balance $100,000 and in this month you have $75,000, this is your cash balance. So this means that you spent $25,000 in operating expenses or a cash outflow during this current month. This is how you can calculate the net burn rate. So again, if you would like to calculate the time before your business run out of cash, which is called runaway rate, this can be calculated based on the cash reserve divided by your burn rate.